Good morning, everyone, and welcome to the European crossover webinar. And we've actually seen the euro trying to make a stand here, but we've also seen gold yesterday. We were talking about that 1446 area here. We've actually seen gold rally up. It can't see it here. It looks just on the daily chart. If you look at it a little bit closer, let's say try this 30-minute. We actually rallied to the 78% of the most recent 78% of the most recent range. Bear with me. There we go. Okay, yeah, from the, it wasn't that, hang on. I think the chart's all screwed up. Didn't quite make it there to that level. But we came up here to this 1463.40. Hang on one second. It's frustrating. Hold on. There we go. There we go. Bear with me. There we go. And actually, that was a 61%. And it came up here to the 1463.30, but the 61% came in right there at 1463. And we gone and then came off. Oh, not a bad amount here, about $6 or so. We've actually come back a little bit higher, but we did go on and we talked about this with the gold market. Let's see here. We talked about this the last couple of days with this gold market coming down here, and this is to, from 1267. Now this is the overall bigger range, 1267 to 1558, and came down to the 38%. And that actually confluenced here also with a level support there. So found some buying there. You can see here on the daily, but a little bit closer here on the 2-hour chart, you can see we put in a hammer bottom, and we had a pretty nice little rally up in here, making a move back up. If you look into some resistance, actually had a pretty decent rally. We dropped down to 1458. We're at 1462.30 right now, but there's some nice resistance coming in right there, about 62.60, 62.70. So we'll see if they maybe take a little bit of a pause here. Moment. We'll see whether or not they want to take a pause from this area, but this is a pretty decent little area right here. And let's go on and take a look here also, moment. We've also seen crude going in and pull back in here also. You can see that right here. After we talked about the vulnerability of it yesterday, and you can see here we had a 2-hour, on the 2-hour chart, we had a gravestone doji here. Nice little pullback here in the crude oil market. And with the S&Ps, because we've been closely tracking the S&Ps, if you look in here, actually are showing here like a little bit of a head and shoulders right here. So there's still potential for this S&P to go and pare back a bit here. Those markets are moving here, unlike what we've seen overall with FX. Hold on. Looks like I lost my main page. Hang on. There we go. Coming up right here and just a good resistance for 63.30 here in the gold if you're scalping around. And we are seeing the euro trying to make a little bit of a stand here. Also, dollar CAD is coming into, we kept our bias chart resistance the same at 62, 32.69 here. So we're just about coming up into that area here. And also, if you look at the cash dollar index here on a 2-hour chart, see we're forming a little bit of a gravestone doji. And dollar peso continues to move a little bit further. We actually have our resistance today at 1938. We've actually scaled past that the breakout level of 1923.6. After being weak for so long, they finally appear to be trying to go in and make a move on that. Moving into the cross rates, Guppy's still hanging close to this 140 area here. And let's take a look as far as bear with me, the news. So we do have at the bottom of the hour UK CPI. Now we did have German CPI, and they came in 1/10, came in right in line. So we have UK CPI and PPI. Eurozone industrial production is going to be at the top of the next hour. And then coming into the States, we do have CPI at 8:30 Eastern. And those will be the key data reports coming in. Crude actually trading close to its lows right now. We talked about the vulnerability yesterday of this market. With that, we're going to move into the news. It says the Kiwi takes flight as the New Zealand Central Bank surprises by standing pat. The beaten up New Zealand dollar soared 1% on about soared. That's a bit of an exaggeration to me. If when I look at the charts, I mean, considering how quiet we've been, I guess you could make the case. Hang on, but I don't know. A bit of a stretch to say that it's soared. We were trading at 63.40, and we're below 64 cents. So. Anyway, the beaten up New Zealand dollar soared Wednesday after the central bank unexpectedly left interest rates on hold while most other major currencies were a little changed. It's flying. Oh, I don't know about that. It was a massive surprise, said Imre Spitzer, head of New Zealand's strategy at Westpac. Almost all analysts had forecast a cut in the 1% benchmark rate to a record low of 0.75%. Futures markets had priced in a better than 75% chance of a cut. But after 2 cuts this year, the RBNZ said it said no urgency to ease policy again. Short positions, which had crept up to the highest level in more than 4 years. The Kiwi zoomed almost a cent higher after the decision before settling a percentage point stronger for the day at 63.03. That's what it's saying. The currency has been one of the worst performing majors this year, dropping 4.7%. And the Kiwi right now is 63.95. So I don't know what they were saying about 63.03. It's all about the New Zealand dollar as a Commonwealth. Elsewhere, the US dollar was mixed and moved slightly as investors look for news on US-China trade negotiations and awaited testimony from Fed Chair Jerome Powell before a congressional committee. Hopes for an imminent deal to wind back tit-for-tat tariffs for the world's 2 largest economies opposed on each other this week to an overnight 1-month high of 98.42 for the dollar index. Jitters over violence in Hong Kong, lack of fresh details on trade talks, and an overnight speech from Trump provided some support, holding the greenback steady and also lifting the safe haven Swiss franc. Against the yen, the dollar bought 906 yen, not far below the 5.5-week high of 948. The dollar scaled a month high against the euro overnight and traded marginally lower below that. Aussie dollar was pinned at 68.42 by week, but largely expected wage data. And then on to the morning bid. No big trade signal as Powell takes the stand. It was barely worth the wait, but President Trump spent more time berating the Federal Reserve in his speech on the economy last night than revealing any new trade truce with China. Disappointing markets, which were expecting some breakthrough or even some new signal on the U.S.-China trade war. Trump remained bellicose, saying the deal was potentially close, but reserving the right to ratchet up tariffs very substantially against Beijing if no deal was sealed early next month. He went on to blame the Fed for the slowdown in the economy and said, referred to the negative interest rates overseas. Give me some of that. Wall Street stocks ended up higher, with S&P closing off record highs and said earlier in the day. But futures gave up a few points through the night, and Asian stocks fell. Shanghai stocks lost 0.3%. Fed Chair Jerome Powell testifies that Congress later is expected to reiterate policies on pause for the remainder of 2019 following 3 consecutive rate cuts this year that will undergo growing market optimism about an imminent rate deal. And in fact, recession can be avoided next year. Bank of America Merrill Lynch's latest survey of the fund managers published on Tuesday showed sentiment about global growth was at its highest in 18 months. Okay, so with that, we'll just go and move into our analysis. Good. It says the euro remains in a tight range. Support remains 994, which is a 61% of 879 to 1180. Confluencing with support level 993. Resistance is going to be 1047. So no changes here with the Kiwi. Kiwi, got that on the brain. With the euro right here. So we're just trading a very tight range. We did go in and dip a little bit lower. Now, when we look here on the 2-hour chart, we talked about this yesterday, then on the 30-minute. We actually have a little hammer here, but we dip below that, but we're trying to reclaim that. We really need to get in. We're in such a tight range. We need to get above this 9. Actually, if you look at it right here, it's going to be about 917, just to start to offset some of this push here. But I think it looks like we can go and move above here. But we're trading a very tight range. Support still remains 994, which also confluences, or actually 993, which confluences with the 994, which is a 61%. We'll leave it at 994. And resistance at 1047. So it remains the same as it was yesterday. With that, let's go and move into the cable. Still relatively tight here with the cable. Let's move this out of the way. Okay, cable pushed higher into the bias chart resistance at 28.75 before easing. Resistance for Wednesday is 28.90 with support coming in at 28.07. So once again, like I said, we pushed higher into that bias chart resistance. We had a 28.75. But we did go and ease back a bit, trying to still hold up in here in these upper levels. So we put our resistance for today at 28.90, not a whole lot higher, but you can see we actually made a stab into that area. So it's 28.90 on the bias chart resistance. And support's going to come in. We've moved that up higher also at 28.07. We go right there. Let's go on and move now into the Aussie dollar. Okay, it says it also continues to drift, finding support at the bias chart area, which was 68.31, which is found that yesterday, and we're still at the same way. Wednesday support's going to come in at 68.17 with resistance at 68.76. So we're opening the door for this to actually move in a little bit lower here with the Aussie dollar. Although we did find support yesterday at that level, that 68.31, but it looks like we can move just a little bit lower. You can see it just continues to drift lower, just no strength whatsoever. So let's go on and put the bias chart. Support is going to come in at 68.17. And resistance will remain the same at 68.76. And with that, we'll move on to what supposedly is referred to as the high-flying kiwi. I don't know about that, but we'll go on and take a look at that. I mean, I don't know about high flying and all this. They made such a big deal about it. And look, it's just expand the range of the last couple of days. It hasn't even taken, forget taking out the high of the last few days. It hasn't even made an attempt to the closing part of the last few days right up in here. But let's go and move on to the Kiwi. The Kiwi has closed lower 7 out of the last 8 sessions. Support is going to be 62.88. You can see the pink line right there, with resistance at 64.54. Well, that's certainly not in any jeopardy at this point, but that's going to be the resistance, I guess, is supposedly if things have really turned around for the Kiwi, we have to be taking a look at it. So it's going to be 64.54 on the upside, allowing for this supposed newfound momentum. And on the downside, for right now, it's going to be right there at 63. Let's just call it 63.25. And with that, let's go on and move on to the dollar CAD. The dollar CAD remains bullish with potential to 33.09. Initial resistance remains at 32.69. A support has moved a shade higher at 31.94. So we're adding on a little bit here. We're seeing the dollar CAD continue to strengthen. Like I said, that's that 32.69. We still think we're going to make it there. Now, once again, like I said, the potential is for this market to move to 33.09 off of that move since Friday. But you know, first initial resistance we're looking at. It looks like we're getting there. It's going to be 32.69. And that's actually the same bias chart resistance we had since yesterday. So that remains the same. The only difference is we are moving the bias chart support from 31.82 to 31.94. And the dollar peso. Well, we finally got above the 1923.6. You can see here, about the little train that could. Finally got past that area here. Probably had a lot more to do with, where the S&Ps have gone and paired back here. I think, and I keep wondering, I've mentioned this yesterday, is I don't know, when is this, the S&Ps, going to start to call bluff on Trump? And this, basically, the emperor has no clothes. I'm just surprised, and not that I'm so bearish, I'm just surprised that we've continued to, the markets have continued to just buy into this whole, the China news is just around the corner, just around the corner, just around the corner. So we're pairing back a little bit. I'm not thinking that we're going to see a significant sell-off, but if you look at the S&Ps on a 30-minute chart, we are forming a head and shoulders, and that would suggest a move, depending on where you see that neckline, would suggest a move to about 30.60. So we'll see if that continues to weigh, and then provide some support here for the dollar peso. Now, on the peso, let's go and get into the analysis on that. Since the dollar peso hit stops above 19.23.6, taking the pair to the stretch level of 19.35 before pairing back. I did see it in the Asian session. We were actually at 19.30. Support is 19.25. Resistance is at 19.38.7. That's 19.38.7. Let's update that. And support is going to be 19.25. Just above the breakout level. And on to the dollar yen. The dollar yen has continued to ignore the run-up in U.S. equities as far as broaching the 927 level. Resistance remains 964 on stops above the pivot pre-U.S. China deal, and support is 878. So it's still the same here, once again, like I said, and it looks like it's really, really holding very, very well, especially now with equities starting to pair back. But as I mentioned, if they got the China deal, then yeah, we're going to push it and we'd see how far we could get. But prior to that, that resistance still remains, which is the 964, if we get above the 927 pre-deal. But right now, even with the S&Ps getting above 3,100 yesterday, you couldn't get this dollar yen to even go and push beyond the 927. So you can see that's holding like a rock, and I think that dollar yen is really telling us something. And we talked about that. Even if they got the China deal, I think that it could be the, I won't say the last hurrah, but that might be just about it for the equities, and then we'd see a decent little pullback. So resistance is going to remain at 964, and support's going to remain the same at 878 here on the dollar yen. Now let's go move into the cash dollar index. The dollar index remains elevated with key resistance at 98.65. A close above and the bulls will be in full control. Minor resistance is at 98.41 and support is 98.11. So when we take a look here with the cash dollar index, we've actually been up as high. We just set up a high around 98.44. And at the top of the hour, we'll complete this a 2-hour bar. And you can see that we're forming a bit of a gravestone doji. So the key, like as I mentioned before, is its resistance is 98.65. That's key. If we were to get above 98.65 on a daily close, bulls are going to be in full control. We'll be full bull on mode, but we are, having that resistance area just before that, which is this is 98.41. But the dollar index still looks pretty good overall. So the initial resistance is going to be, which is prior resistance. The initial support will be 98.11. So once again, the 98.11 stays the same. 98.65 stays the same on the cash dollar index. With that, we'll move into the cross rates. One moment. So we have seen the Kiwi yen kind of make a push in here, obviously taking out these areas here. Unlike the Kiwi itself, which really the Kiwi versus the dollar, I don't think has been very much of a move. Although to see the news, they're talking about it flying and all this other bit of malarkey. But right here now, the Kiwi yen, now you can see all of the ranges in huge. You can certainly see that, hey, look, you know, it's actually taken out, for at least for now, some key closes. Resistance at this point is going to be right here, which is going to be 69.80. And support, well, if we're going to see this market hold its own, it's going to be right there, which is going to be, let me just call it 69 cents even. Now let's go and move into the euro yen. Well, just not a whole lot happening here. You can see here, although we're just pushing a little bit lower. We've had our bias chart support here since yesterday for 1970, and that's still going to remain the same. Although it certainly looks like we're heading that way. Look at this little tiny range. I mean, you would think we were looking at a 5-minute chart and to think this is a daily range. I mean, it's unbelievable when we've seen, bigger ranges, much larger ranges, but it's going to be 1970, which is the same as yesterday. The only difference is now resistance. With these tight ranges, really the focus is on the close. So right now, we're actually going to move the resistance down here to 20. There we go, right there. 2091. Let's go into the euro. Well, you can see here where we broke this trend line, and it's still going to remain on the defensive side. Resistance on this euro is going to come in right there, which will confluence about almost where the trend line is. You can see right here coming across. It's going to be right there, which is actually where they went to the day before yesterday, or actually yesterday. And that's actually going to come in right there, 61.43. So 61.43 on resistance. Actually, we had it 61.44 yesterday. That's good enough right there. And support. We put for 60.46, which we did off of the 2-hour chart yesterday. Actually going to put it right there at 60. Yeah, there's a 60.46. We actually had yesterday 60.46 Yeah, let's go move that to the 60.54 for bias chart support. And let's go with the Euro Kiwi. Well, we've finally broken here lower. Obviously, with the Kiwi strengthening and the Euro just basically sitting like a bump on a log, we certainly have gone and moved lower here. And we haven't tagged it yet, but you can see where support is coming in right here. 71.31. That's going to be our bias chart for support for today. Resistance is going to be these lows right there. Right there, the break of these lows, which is 73.40. 73.40. That's going to be the bias chart resistance. And let's go move into the ASEAN. There we go. Boy, these tight ranges are something else. Seriously. Wow, unbelievable. We've had a resistance of 75.31. Let's go in and move into the 2-hour chart. I remember when this thing used to be a real high flyer. Holy smokes. Resistance right now, which is going to put it right there at that. You can see right there we have this gravestone doji. That's going to be resistance. Just 74.85. And we had 74.36. Actually, I have to move this higher. Right there. Which is where we found support yesterday. It's actually right there, 74.36. 37. That's going to remain the same. So it's going to be 74.36. And with that, we'll move on to the guppy. We are still hanging around this 140 area. So you can see there, it's laid out. There's no changes here with the guppy. The only thing is that this level here is high. It's actually right here, 39.21. Let's pull this down. There you go. So support is 39.21 with resistance at 40.78. No changes there. You can see we're trapped in a, let's say we're trapped, but we're definitely in this well-defined zone, even though it's only on a 2-hour chart. Look at that. And no changes there. And with that, we'll move into the sterling odd. Well, we have moved higher here, and let's go and take a look at this on the daily. There's your resistance right there. You can see that right there. Which is going to be right there at 88.48 for today. Actually, we had just 88.51. So yeah, we're still in line here with the resistance we're looking at, which is 88.51. We'll leave it there. And support, we've definitely moved higher. Actually, support now is going to be right there. 86.84. So we're moving it from 86.20 to 86.84. And we've got our bias chart set. With that, let's go move back into the other markets. So if you look at the S&P, take a look at this. This is after a run up, so we've got a bit of a head and shoulder here. See that? And depending on where you place the neckline here, and actually you can see here, let's take a look at this for you. Look at that. So that makes a lot of sense right there, you know, and that suggests a move to 3060. Actually, the neckline 84, so probably about 3062, 3063. But obviously, this is after a long run. Look at here, you see? So it makes sense. I didn't even see that. Boy, this was a nice little right here. Nice little entry right there. Holy smokes. Haven't traded the S&P in a little while. But yeah, suggests a move to 3063, around there, which will keep the pressure here on crude oil. We talked about this yesterday in the chat room, how much this has been, you know, tracking the S&Ps, buying into the whole, the China news is just around the corner, the China news is just around the corner, the China news is just around. You have to wonder at some point they're going to say the emperor has no clothes. But we did get a gravestone doji yesterday. You can see that. Talked about, you know, the volume area here. In the upper, you know, not upper 50s, but around the 57.60. Actually, we talked about 57.71 was the make or break level. They didn't quite make it there. Nice gravestone doji, and we've continued to weaken, and probably will stay weak as long as the S&P makes that move down there, as I mentioned, with the potential move to around 63 for the S&Ps. Bonds have turned around a bit, but so have the 10-year yields. So really, I don't want to go on to say too much about the euro, because the euro has been not, you know, pretty much a sick dog. Gold moving up, like I said, from that 38%, good level here. Some resistance coming in right there, which is going to be 1466. You see that right here? Right there. That's 1466. This is on the XAU, and right there, 1466.60. So we would be just about, let's see, about $1. Looks like about $1.50, anywhere between $1 to $1.50 into some resistance here. I think that's going to come in about around 1467 in the D's futures. Let's take a look at this. And we do have some decent volume coming in at 1467 and 1467.90. So keep an eye on that. I think, let's see here, yields paring back. And Euro needs to, I told you, we need to get above that 1917 area on this 30-minute close to finally knock out that little downside dip. But that's all that we have. Watch for the 1938.7 here on the dollar peso. And also, we talked about here, we're just about nipped it here, 32.69 in dollar CAD for the bias chart resistance, which was an intraday, not intraday, but an intermediate target we're looking for before the potential, which is 33.09. With that said, thanks for joining us here on the European crossover webinar. We'll see you in the chat room. Have a good trading day.